Okay, let's start by analyzing just a few key stocks that people are watching this week. Right now, we're looking at Apple. And Apple, you can see if you watch this cursor that it provided a very, very long cup. This cup is well over a year and a half long. And then it had a handle. It went down to this level, and that was basically the flush out. And you can see that flush out was on pretty high volume. Usually it's on a little bit lower volume, but they were serious about flushing out a lot of those institutions. And so the flush out happened, and then you can see immediately it tried to rebound to its 10-week moving average, and it did so. Kind of hung around there with very small changes in here, and it formed another small cup. Now this is not a very nice cup. There's a lot of jagged edges in here, but nonetheless, this is a cup, or you can look at it as a small consolidation right in this area. And you can see this is a support level here. This horizontal line right there is a support level, and that is a key level if it's going to break through and get rid of some of those weak holders. So it had a cup and handle, another cup and handle, and this handle here was basically on very light volume. This is almost textbook, and it was showing you that, hey, it's ready to break out. And sure enough, on heavy volume in this bar right here, you can see it broke out. Not only did it break through the 10-week moving average, but it also broke through the top of the handle, and then it was off to the races. And now Apple is on a tear. It's doing extremely well as far as relative strength with the S&P 500. It's continuing to go up. I'm not sure I'd buy it right here because it looks pricey to me. It's outside the range where I normally buy stocks. But nonetheless, it's certainly a bullish chart, and it's a new bullish chart. You can see a golden cross right here and a cup and handle. This was a good stage, good time to buy it, pretty early stage. So now the stock has gone basically from 80 to 96, and that's post-split. Remember, this got up to 700 pre-split, which was this horizontal line right here. So we think it's headed there. Might it take some detours along the way? We think it might come back here and test the 10-week moving average, possibly, because it's going up on very little volume, and that's not a good sign if you want to continue to trade on this bullish trend. But a good sign would be a good bounce off this 10-week moving average, continuing that up move all the way up to over $100. That's the weekly. This is the daily. You can see a very small little cup and handle pattern happening right now here. So it could potentially break out of here, but our odds are, you using the weekly, we think it's going to go to over $100, but we think it's probably not going to just go directly there. Let's take a look at our next stock, which I guess we'll look at Google. Now, Google had a split a few months ago as well. It was over $1,200 or $1,000, and now it's at $581. And you can see that Google has formed a cup and handle as well. It's almost a textbook. The handle is on low volume, and it had a breakout, but the breakout wasn't on very great volume. So you're seeing a little bit of failure on that breakout as it's coming back to test out the breakout level. We think it's coming back to test out the 10-week moving average. We have a weak market right now. And Google, if you look at this line right here, this is the relative strength line against the S&P, not doing too well against the S&P. So we think there's a little bit more pain to go through before this resumes this uptrend, which we think it will. This is a beautiful looking uptrend chart going from 300 to 603. And looking at this chart as well, is you can't really make a lot out of the daily noise. And right now, we think it's kind of pulling back to the 10-week moving average, so we might be set up to put on our positions there if the market's going to cooperate. Looking next at Amazon. All right, Amazon is an interesting one in that it's got a beautiful upward bias chart. So it's a bullish chart going from 200 to 400 plus here. This is the resistance level. Then it came back, it tested this resistance level on high volume, and it broke through and created a new resistance level right here. So let's go ahead and draw that in there. That's a new resistance level. We think there's a good chance that it's going to come back and either test this resistance level or this one here. Chances are it's going to come back and test the 10-week moving average, but now that this 10-week moving average is below the 40-week moving average, we don't think that bodes well for the stock. This stock has the potential of going from top of this line here, let's take a look, 408 down to 284. That's about 150 points. So it bounced up to here, 150 points off of that, puts us down at about 190. And if it goes to 190, that's a serious move downwards. We think that's where it's probably going, but it's got to go through these two levels first to get there. I wouldn't be buying Amazon too much in here. Just may want to mess around a little bit with it. Facebook. So let's take a look at Facebook. All right, Facebook has a nice upwardly biased chart. It's very bullish. Red line's above the black line, which we always like. We got the parabolic SAR right here turning upward and providing support. We've got a major support level here, which it provided a resistance level. It bounced, it broke through, it broke out, came back and tested it, and it tested it on good volume, and it had a great bounce, and here it is, testing this handle area. And this handle area is on low volume. So this is a textbook cup and handle, another textbook cup and handle. And we think the breakout is about 68 bucks, somewhere in there. If we have a decent market, you can buy this stock at 68 bucks. As it right now is testing its 10-week moving average. And this is a bullish chart. If I've ever seen a bullish chart, this is one of them. And it's formed a very orderly cup and handle here. And we think that it would have been nice if this had kind of come up and tested this a little higher. But nonetheless, we've got a handle working. And it looks like, to me, this stock could go 25. Let's see, it could go 40. This stock could easily hit 85 in the right market. So we think that this is going to hit 85 before it comes down here and does anything testing this particular average as well. Twitter. Let's check out Twitter here. Twitter is forming the left side of a cup and handle, but it's way far away from getting any kind of definitive formation in a cup and handle. In fact, that cup is starting to break down here, which tells us that this stock may be going lower. Normally you got them great volume going up, but normally you want this to continue forming a nice orderly cup and handle to show the institutions are getting into it. But right now it just broke through this support that was created here by this level, and it broke through it, and it's breaking through this week. We think this could go down and test in this area here, the 31s, before it resumes an upward biased handle. It might create a double bottom here. But you gotta really wait around for Twitter to go up here, because we think there's a lot of selling that happened here in these weeks. Tesla, the electric car company, has got a cup here that it made, and it broke out through this resistance level, went way up on high volume, came back and tested that resistance level on pretty decent volume, but not as high as the breakout volume. See the difference there? This volume versus this volume bar down here. So it tested it, and it bounced right off that 40-week moving average, and then it went straight back up and got it back up over the 10-week moving average, had a nice tight pattern in here where it didn't do anything for 3 weeks, and then after that fourth week, broke out again. And if you had been watching that there, you might have been able to pick up the 3 weeks tight pattern if you were watching it, because it broke out on nice volume. Now it's coming up here, and it's pulling out a very orderly handle in a cup and handle formation. We think the stock could go pretty high. Let's take a look. We can the low here is let's see if we can get a low, 116.10, and the high was 265. So that's about a 150 point move. So a 152 point move from there after it had a correction. And the bottom here in this particular bar is 177. 150 point move would put it at about 320. So we just think this stock, if you buy it right, probably off a bounce right here in here off this 10-week moving average. If the market lines up, we think it could go to 320. That's a nice move, 212 to 320.